PowerPoint presentation?
Yes, Danny.
Okay, thank you. So today I will be presenting an overview on how to conduct sample surveys for the estimation of intermediate consumption. This was presented during the online training workshop last week requested by Turkmenistan. This may be important to some of you since our countries sometimes request assistance in drafting questionnaires related to their SUD, like for example Laos, Afghanistan, and Sri Lanka. Okay, the flow of the presentation will be as follows. We will first discuss the concept of intermediate consumption. We will be discussing what can be considered intermediate consumption and those that are to be excluded and recorded under a different transaction. We will then move on to some country examples of surveys on cost structures, which are used in estimating intermediate consumption, followed by an overview of the survey process, which include the sample design and the questionnaire design. And finally, we will briefly discuss other issues related to the implementation of the survey. Okay, let us first discuss intermediate consumption, its concepts, and a brief discussion on how it is compiled. Intermediate consumption shows the use of goods and services necessary to produce primary and secondary outputs of an industry. It is part of the use table, as illustrated here, and is measured at purchasers' prices. It is listed by industry in the columns and products in the rows. So, what transactions are treated as intermediate consumption and what transactions are included? Intermediate consumption includes value of goods and services consumed as inputs by a process of production. It excludes fixed assets whose consumption is recorded as consumption of fixed capital, such as land, building, machineries, and equipment. It includes non-durable goods and services with an expected life of less than 1 year and used up in the process of production by industry. So any goods and services purchased for resale without processing are excluded and are recorded instead as inventories. Intermediate consumption also includes rentals paid on the use of fixed assets, whether equipment or buildings, that are leased from other institutional units under an operating lease, as well as fees, commissions, royalties, which are payable under licensing agreements, and values of all goods or services used as input into ancillary activities. These ancillary activities include purchasing, sales, marketing, accounting, data processing, transportation, storage, maintenance, and security. Intermediate consumption excludes expenditure by enterprises on valuables consisting of work of art, precious metals, and stones, which are recorded in the capital account. Okay. Now, this table shows transactions that are recorded under compensation of employees and those related transactions that are recorded under intermediate consumption. For transactions where the employees are obliged to use the goods or services in order to enable them to carry out their work, these are recorded under intermediate consumption. So some examples include tools or equipment used at work, clothing or footwear worn exclusively at work like PPEs or uniforms, accommodation services at the place of work, special meals or drinks necessitated by exceptional working conditions, transportation and hotel services, facilities necessitated by the nature of work, first aid facilities, as well as medical examinations required because of the nature of work. On the other hand, if the goods and services are used by employees in their own time and in their own discretion to satisfy their wants and needs, these transactions are recorded under remuneration in kind. Some examples include provision of ordinary housing services, services of vehicles or other durable consumer goods used extensively away from work, and transportation to and from work. Okay, let us distinguish intermediate consumption from gross fixed capital formation. Goods and services transformed or entirely used up in the production are considered intermediate consumption, while gross fixed capital formation refers to cost of using fixed assets owned by the enterprise, including expenditure on acquisition of fixed assets. For small tools, durable producer goods that are small, inexpensive, and used to perform simple operations, these are considered intermediate consumption. Those expenditure also that are made regularly and are very small compared to machinery and equipment are also included as intermediate consumption. Say, for example, knives, hammers, and screwdrivers. But when these tools are or when these tools account for a significant part of the stock of producers' durable goods, these are already considered as gross fixed capital formation. Okay, for maintenance and repairs, ordinary and regular maintenance and repair of fixed assets that are used in production are listed under intermediate consumption. For it to be considered intermediate consumption, two features need to be satisfied. First, these are undertaken periodically for these items to be used up to the expected service life. And second, they do not change the performance of the fixed assets, but rather just maintain it in good or working condition or restore it to its previous condition in the case of a breakdown. On the other hand, major renovations, reconstructions, or enlargements that go considerably beyond what is required to keep the fixed asset in good condition are already considered as cross-fixed capital formation. Okay, for research and development, these transactions are listed under cross-fixed capital formation unless in some cases where it is clear that the activity does not entail any economic benefit for its owners. In terms of military equipment, these are generally recorded under GFCF, including large military and weapon systems. Some durable military goods such as bombs, torpedoes, and spare parts are considered as inventories, but when used up, they are recorded as intermediate consumption with a withdrawal from inventories. Okay, moving on to other transactions. For services provided by government to producers, if the producer is charged for these services, it is considered intermediate consumption of the producer. But if the charge does not represent an economically significant price, this is treated as collective consumption of government. For work carried out by the business, fees of outsourced services are considered intermediate consumption, while staff costs like wages, salaries, and payments in kind are considered compensation of employees. Finally, let's go to leasing fixed assets. Rentals paid on buildings or on machinery and equipment under an operating lease are considered intermediate consumption. Also, the cost of materials needed for maintenance and repairs are considered intermediate consumption. But if the enterprise owns its buildings, machinery, and equipment, these are considered consumption of fixed assets. And for the interest costs, these are considered as net operating surplus. Okay, in recording in the use table, we can distinguish on and off diagonal intermediate consumption. On diagonal intermediate consumption refers to businesses purchasing a product mapped to the industry based on the standard industrial classification and the classification of products by activity. An example is a business in water transport purchasing a product within the water transport. Okay, in this chart, the on diagonal intermediate consumption are the dark green cells. The off-diagonal intermediate consumption, on the other hand, refers to businesses purchasing products not directly mapped to their industry. For example, businesses within water transport purchasing a product within the air transport. So these transactions may be within the transport sector, but not in the same industry. So in this chart, the light green cells are the off-diagonal intermediate consumption of industry 3. Okay, now how is intermediate consumption usually compiled? There are two main approaches. The first one, which is also the recommended approach, is the regular data collection on input structure. In this approach, we first start with total intermediate consumption by industry, which is the total row, and balance the amount which are available for intermediate use of the various products. So basically, in the end, the equilibrium condition is that the sum of the total row, which is the red cells, should be the same as the sum of the total column, or the blue cells. Okay, the second approach is the institutional approach, where we rely on data sources from the enterprises. So for this presentation, we will not be focusing on the institutional approach, but rather we will be focusing on the recommended approach. Okay, in the recommended approach, we first need to estimate total intermediate consumption by industry, after which we estimate inputs by products for each industry. So we will be discussing this in more detail in the coming slides. Okay, starting off with total intermediate consumption by industry. The best source for total intermediate consumption is a census, as it includes all enterprises. But it is not possible to conduct a census every year, so compilers use other sources of data to estimate total intermediate consumption, particularly a well-designed sample survey, which would yield better results than a census with a poor response rate. Also, other sources may include accounts-based statistics and VAT-based statistics. In estimating total consumption, we can sum up all input data provided by the data supplier or estimate the intermediate consumption independently using annual or quarterly business surveys based on information from business accounts, government accounts, annual reports, and financial statements of economic units. Okay, the next step, as mentioned earlier, is to estimate inputs by products for each industry. So to start, we should collate known values for specific cells, both in the rows and columns. These values are known and are sourced from available data or may have been calculated within framework of independent subsystems. Following this is to estimate other values using input structure, which is sourced usually from surveys on cost structures and complemented by other information on the input structure. These surveys on cost structures contain detailed purchases of goods and services and should be collected annually, covering all industries through surveys of cost structures. So after getting all these information, we need to put together all these data and come up with an estimate per product and per industry. So the remaining parts of the presentation will focus on the survey of cost structures, which is used in estimating intermediate consumption. Okay, so in this section, we will look at the sources. We'll be focusing on country examples of these surveys as well as best country practices. Okay, so the survey of cost structures are usually held annually. Usually the survey includes informations like this listed here, and it depends on who is designing the questionnaire as well as the information needed from such survey. The issue with cost structure survey is that it may not have the full coverage because of the threshold placed, which we will discuss in more detail later, as well as the sample size selected. Also, cost structure survey should not be the only source to estimate intermediate consumption. Rather, it should supplement known totals and subtotals together with other data sources. Okay, I have summarized here the different surveys that we found in different countries. So we will be using these surveys in drawing some best practices that we will be discussing later. So the first is the annual purchases survey of the UK, which is conducted annually. A good feature of this survey is that the questionnaire is tailored to each industry, minimizing the respondent burden. So they have 106 questionnaires for the 106 industries they have. We also have the structural business statistics, which includes a cost structure table describing the structure, conduct, and performance of economic activities down to the most detailed economic activity, including information on input-related variables such as labor, goods and services inputs, and capital input materials. So these structural business statistics are present in the EU countries. The third is the IO survey of the Philippine business and industry, which includes a section on costs. That defining feature is that they have 6 types of questionnaires based on economic activity of the sample establishment. For Georgia, they have a survey on the structure of intermediate consumption, where they conduct one survey annually with a few detailed questions and a second, more detailed survey, which is held every 5 years. In Sri Lanka, we also have the annual survey of industries where they have a section on intermediate consumption, while for Germany and Sweden, they have sector-specific surveys. Particularly for Germany, they have a survey in manufacturing, mining, and quarrying, while for Sweden, they have a survey for the services sector. Okay, let us move on to the survey process. We will first discuss the sample design and later move on to the questionnaire design. Okay, in the survey process, the scope covers 5 elements. The first two is covered under the sample design. Particularly, we cover the who, which is who will be surveyed, in this case, businesses, which economic activities are to be surveyed, and whether we will consider enterprises or establishments. This also answers the sample, whether it will be a fixed sample or a rotating sample. Second, we will also look at the where, which is the geographical coverage and the sample design. Okay, now in discussing the sample design, we need to understand the difference between population and sample. I am sure all of you are familiar with this, but just to review, the population refers to the total items about which information is desired. It can be finite, consisting of a fixed number of elements, so it is possible to enumerate them in its totality, or infinite, which is theoretically impossible to observe all the elements. In this figure, the population is the one inside the black box. Okay, the sample, on the other hand, is part of the population that represents the characteristics of a population. In this case, it is the one inside the yellow box. Okay, the population can be further distinguished. We have the general population, which is the orange circle here, and it is the largest group of potential participants of a study. It also refers to the entire group about which some information is required to be ascertained. In the case of cost structure surveys, the general population includes all businesses in the country. Okay, the next is the target population, which is the gray circle. It is the population you are interested to study. This needs to have at least a single attribute of interest, as this attribute makes the participants eligible as population members. This is the refined general population, where those which violate one of the research context and assumptions that may badly affect the research outcomes are removed. In this case, our target population are enterprises in the formal sector. Okay, the next is the accessible population, which is the yellow circle. The accessible population is reached after taking out all individuals of the target population who will or may not participate or who cannot be accessed at the study period. It is the final group of participants from which data is collected by surveying either all its members or a sample drawn from it. It also represents the sampling framework. So in this case, we use the business register to list enterprises that will be included in the sampling frame. From the sampling frame, we choose our survey sample, which is the green circle. And the sample is composed of a number of subjects, which is the smallest orange circle. Okay, so moving on to some terms. The sample should be able to generalize your findings to the whole population. A sample has two features. First, it should be representative of the population. And second, it should be large enough to give you enough information to avoid errors. Okay, the process of selecting sample for estimating the population characteristics is called sampling. It is the process of obtaining information about an entire population by examining only a part of it. The next is sampling unit, which refers to the elementary units or group of such units, which besides being clearly defined, identifiable, and observable, are convenient for the purpose of sampling. So for example, for family income and expenditure survey, the household is considered as a sampling unit. For crop survey, a farm or a group of farms. And in the case of business surveys, enterprise surveys, or cost structure surveys, the sampling unit is an enterprise. Okay, the sampling frame, as mentioned earlier, is a list containing all sampling units from which the sample is to be drawn. finally, the sample design refers to the plans and methods to be followed in selecting sample from the target population, including the estimation technique formula for computing the sample statistics. Okay, there are two types of sampling method, the probability sampling and the non-probability sampling. The probability sampling allows precision about the relationship between the sample population. Listed here are four types of probability sampling, but we will not explain everything in detail anymore. We will just focus on the sampling method usually used in cost structure surveys. But just to enumerate, the first type of probability sampling is the simple random sample, where the sample is done through a lottery. Second is the systematic random sample, where the every nth number is selected as part of the sample. Third is stratified random sample, where the population is first divided into groups, and for each strata, the samples are drawn
I think nawala si Dani. Let's just wait for her to return. Parang naputol na ata yung connection ni Danny. Clara, do you want to present while maybe she can resume after your
Sure.
presentation?
Sige.
Thank you.
Okay. So I'll start my presentation. 1 second. Okay. Okay. So today I'll be discussing contracts, goodwill, and marketing assets. So for the main references for today, number one is System of National Accounts, 2008. I also checked some websites on general law for a lot of the terms. And the International Financial Reporting Standards Foundation, and an issues paper by the Australian Bureau of Statistics. So these are just to support some of the ideas by the SNA as well. So this is just part two of the non-produced assets. If you recall, the last time in September I discussed natural resources. Um, so the other two types are number one, contracts, and number two, goodwill and marketing assets. So I'm just using the umbrella term contracts because in the SNA they use contracts, leases, and licenses. But actually, leases and licenses are just two types of contracts. And just to recap, non-produced assets are non-financial assets that have come into existence in ways other than through process of production. So although they do not appear in the production account, they are believed to still generate capital services and are therefore important to still record in other accounts. So this is specifically important for the accumulation accounts, namely number one, the capital account, which will show acquisitions less disposals of non-produced assets, as well as the revaluation account for holding gains and losses and other changes in the volume of the assets account. So this will show changes in amounts of non-produced assets due to factors other than transactions. So specifically for contracts, these would be economic appearances and disappearances. So we'll start with defining what exactly a contract is. So in the SNA, this is defined as an agreement between two institutional units, which may be written and legally binding, or maybe informal or even only implicit. So this differs from the definition of contracts used in law, because for law, these need to be legally enforceable. So the definition in SNA is quite loose compared to that. And what there are two complex types named in the SNA. So those are what I mentioned already, which is the are leases and licenses. So actually, these are not defined explicitly um, in the SNA. So according to law websites, a lease is a transfer of exclusive interest, wherein the person who the lessee gets exclusive rights to a certain property um, or a certain asset. For licenses, these are just permissions or rights to do something. So it's not necessarily exclusive. So before I go into the details of both of these, this is an overview of how certain contracts may be included as assets. So these are regarded as assets based on two main criteria. The first one is that the contract should specify a price for the use of an asset or provision of services different from the price that would prevail in its absence. So basically, there's like a margin over the actual product or service being specified in the contract. So the second criterion would be that one party to the contract must be able to legally and practically realize the price difference. So in essence, this just means that there is a way to get a profit out of this for one party in the contract, most possibly through transferring or selling the contract to another unit. So this is an overview also of the types of contracts that can be assets. So the first one is a marketable operating lease. And the example of this is subleasing, and I'll go into this more later. The second type is a permit to use natural resources. So an example is a fishing quota. The third type is a permit to undertake specific activities. So an example is the permit to operate a taxi. And the fourth is the entitlement to feature goods and services on an exclusive basis. So the example here can be footballers' contracts, publishing rights. So yeah, I'll go more into detail later on. And then the general valuation for a contract would be based on market price or information, or if there's none, you can also use the net present value of the excess of the prevailing price over that named in the agreement. But in general, compared to our previous discussion on natural resources, contracts definitely have more likelihood to have a market price available. So most of the time, you wouldn't need to actually resort to NPV. So regarding its recording, um, these are recommended by SNA to be recorded when they're sold. So first, in the other changes in the volume of assets account. So this would be an economic appearance. And then afterwards, this would form a transaction in the capital account. So essentially, changes in the value of the contract due to changes in the prevailing price are recorded as revaluation, whereas changes due to the expiration of the advantage given by the asset as the time over which it is valid are recorded as other changes in volume. So before we move on into a deeper discussion on the types of contracts, first we should reiterate the difference between a legal owner and an economic owner. So a legal owner is the unit entitled in law and sustainable under the law to claim the benefits associated with the asset, whereas the economic owner is a unit entitled to claim the benefits associated with the use of the asset in the course of an economic activity by virtue of accepting the associated risks. So when they're different, the legal owner has divested itself of the risks in return for agreed payments from the economic owner. So for leases, there are three types. So the first type is an operating lease. So this is where the legal owner is also the economic owner and accepts the operating risks and receives the economic benefits from the asset by using it in a productive activity. So this is the most common and familiar type. So the indicator for this is that it is the responsibility of the legal owner to provide any necessary repair and maintenance of the asset. And the asset is recorded as on the lessor's balance sheet, uh, while the payments are recorded as payments for a service. So these payments are actually recorded as rentals. So a very simple example is that of leasing a vehicle, wherein the person or the unit who owns the vehicle is also deriving benefits directly from it. So therefore, the rent being paid by the lessees. The second type of lease is a financial lease. So this is where the lessor, as the legal owner of an asset, passes the economic ownership to the lessee, who then accepts the operating risks and receives economic benefits from using the asset in a productive capacity. So the indicator here is that it is the responsibility of the economic owner to provide any necessary repair and maintenance of the asset. Regarding the recording of the asset, the legal owner is shown as issuing a loan to the lessee, with which the lessee acquires the asset, and the asset is shown on the balance sheet of the lessee and not the lessor. So the corresponding loan is shown as an asset of the lessor and the liability of the lessee. So when uh, when it comes to the whole life of the asset being recorded, um, this would simply be uh, this would simply be recorded definitely on the balance sheet of the purchaser, or sorry, of the economic owner. Whereas when it's not for the whole life of the asset, so less than less than the whole life of the asset. There could be several possibilities at the end of the contract. So the asset could be returned to the lessor, or it could be canceled, um, or the loan can be canceled. There could be any possible new arrangement. So basic, but usually this would show this on the beginning of the lease. So this would be definitely agreed upon by both the lessor and the lessee at the beginning. So for payments, the payment of interest, um, there's a payment of interest and a repayment of the principal. So if the lessor is a financial institution, sorry, part of the payment is also treated as a service charge or FISM. And the value of the loan would equal the present value of the payments to be made under the lease agreement, covering the value of the asset plus the value of the service charges to be made under the terms of the lease. And unless specified, the repayment of principal should correspond to the decline in the value of the asset, i.e., the consumption of fixed capital. And the interest payment should correspond to the return to capital on the asset. And if there is a service charge, this would correspond to the difference between the total amount payable and the two elements previously mentioned. So, an example of a financial lease is when a commercial airliner, which is legally owned by a bank, is leased to an airline. So, you will see in that case that since the airline economically owns uh, the airplane, then he's able to, or it's able to derive the benefits from this directly because of the asset being under his books, whereas a bank wouldn't see that in a productive capacity. So that's the main difference here. And the third type of lease is a resource lease. So the legal owner of a natural resource um, is considered, which is considered to have an infinite life, makes it available to a lessee in return for regular payment, recorded as property income. And this is also described as rent. So this is similar to the operating lease, except we're dealing with infinite natural resources here. And one exception to of this being a resource lease is when it comes to the lease of land. So this can be taken as the sale of land if it satisfies the following criteria. So if its costs and benefits are assumed by the lessee, if there's upfront payment or installment made by the lessee, and if there's a substantial length of the lease contract, and if there are cancellation and if there is no possibility to cancel early, or so it's more rigid, and if there are transferability possibilities by the lessee, and this will also be some basis for the permits in the next section. So um, before we move on to the licenses, just to make it clear, as I mentioned earlier, a marketable operating lease would be would be one possibility for an asset, given the following conditions. So number one, the lease must specify a predetermined price for the use of an asset that differs from the price of the asset, uh, and could be leased for at the current time. The second is that the lessee is able legally and practically to realize the price difference by subcontracting the lease to a third party. So in practice, it is recommended that such assets should be recorded only when the lessee does actually exercise his right to realize the price difference. So one example of this is when a landlord leases his property to a tenant for 100. And as the lease goes on, since it's happening right now, the market prices have changed. So it's possible for him to lease this now at 120. So the 20 here is a difference that is considered an encumbrance. And now if the lessee is able to transfer this right to lease, so if he can sublet this to another party for 120, then 20 would constitute the value of the asset for the tenant. So next, we can go to discussing licenses. So the first type of license are permits to use natural resources. So given the conditions here, we can see that there are three possible results. So the first is when the owner permits the resource to be used to extinction. This would constitute a sale or expropriation of the natural resource. The second is when the owner allows resource to be used for an extended period of time in such a way that in effect the user controls the use of the resource during this time with little if any intervention from the legal owner. So this would result in when a contract would constitute an asset, which would be created for the user. The third condition is when the owner can extend or withhold permission to continued use of the asset from 1 year to the next. So for this one, there's no one clear-cut result. So there's a range of criteria that is recommended by the SNA to consider whether it can be an asset or rental. So here, you can see in this table the different considerations. So it doesn't necessarily mean that all of these have to be accomplished or fulfilled. It's sort of like it's sort of like the accountant's consideration. So maybe like majority or um, if some may be stronger than others. So whether an asset is made and purchased for this, i.e. a contract, associated risks and benefits would be more so assumed, whereas for rental agreements, these would only be partially or not at all assumed. With regard to the degree of control, there's definitely higher flexibility for the purchase of an asset, whereas for a rental agreement, there are detailed stipulations on asset usage, so less flexible. For payment terms, upfront payment or installment would be more likely for the purchase of an asset, whereas for a rental agreement, payments over the duration of the contract um, would be more plausible, especially if this is tied to the revenue generated, so like a share of the revenue or whatnot. For the length of the license, this is longer term for the purchase of an asset, whereas for a rental agreement, it is short term. For transferability, this would be actual or de facto. So it's very clear that if you are able to transfer or sell your rights to this would be a purchase of an asset. Whereas for rentals, it would not likely to be transferable. For cancellation possibilities, there are stronger restrictions against cancellation for the purchase of an asset by the lessor. Whereas for the rental agreement, there is a unilateral right to terminate. So the lessor is able to cancel at a higher degree of control. And lastly, one other basis is the conception in the business world and international accounting standards. So for the purchase of an asset, it's more likely that if it's treated as capital investment by the company, it would it gives you sort of more of an indicator that um, that you can also consider it an asset. And the same goes as for leasing or rental agreements. So for this one, actually, a good example that was given by the SNA was that of the sale of licenses to use radio spectra for third generation mobile phones. So this was sort of like their reference in coming up with these indicators. So for in that example, because the licensor reimburses none of the upfront payment by the lessee, and that regions or types of customers served were quite flexible. They then classed this as actually a purchase of an asset. So they didn't actually go through all of these conditions, but because of certain like deal breaking indicators, they were able to decide that these licenses were actually assets and not rental agreements. So the second type of license is a permit to undertake specific activities. So this is essentially permission granted to engage in a particular activity given the following conditions. So firstly, it should not utilize an asset belonging to the permit issuer. Secondly, it is not dependent on a qualifying criterion, but is designed to limit the number of individual units entitled to engage in the activity. Um, so, for example, passing an examination to qualify for permission to drive a car would be a qualifying criterion. Third, there's a limited number of permits allowing the holder to make monopoly profits when undertaking the activity concerned. And fourth, the permit holder must be legally and practically able to sell the permit to a third party. So this is also known as on-selling. So for permits to undertake specific activities, there are a few types as well. So the first is issued by government in order to limit the number of units operating in a particular field. So recovering some of the profits as fee for themselves, usually in the form of taxes. So um, these are usually recorded as other taxes on production, the payment for these kinds of licenses, and on an accrual basis if for several years. So meaning that the cost is spread over its useful life. Unless this is cancelled without repayment. So this presupposes that the government has the decision to offer a refund or not. Basically, to offer it on an accrual basis or not. So the valuation, this is determined by the value at which it can be sold, or if no such figure is available, the present value of the future stream of monopoly profits. So when we're dealing with a single tax payment, meaning there's no accrual offered or refund offered by the government, it is valued at the value at which it can be sold, or the value of all the future monopoly profits without deduction. Whereas for accrual basis, these are valued at the excess of the monopoly profits over the cost. So in this case, you would be deducting the account receivable that would be issued from the government. So here we can discuss the example given by SNA. So the example depicts that Company A buys a government permit to operate a casino for 3 years at a total cost of 12, expecting to make monopoly profits of 7 per year. So the government may or may not be prepared to make a refund if A relinquished the permit. And A may utilize the permit for the whole of the 3 years for which it is valid, or it can decide to sell the permit to Company B at the end of year 1. So the simplest case is when the government does not offer a refund and A keeps the permit for 3 years. So here in this table, you'll see that this is actually end year. So year 0 just means that it's the very start of the permit. So Company A pays a single payment of tax at 12. And the initial permit value is basically the 3 years worth of monopoly profits, which is totaling to 21. And then every year, there would be a change in volume of 7. And this would show in the change of other changes of volume accounts. Second case is when the government does not offer a refund and A sells the permit to B after 1 year for 13. So in this case, the tax is the same, so it's a single payment. And then at the end of year 1, so the value of the permit has decreased by its monopoly profit for the year. So that's 7. And then when the company A sells it to company B, there will be a revaluation of 1, which will end up at 13 as the permit value after year 1 for company B. And since it's only 13, this would decrease at a proportional value, which is 6.5 now. And at the end of year 3, this would, of course, decrease to 0 again. For case 3, the government does offer a refund and A keeps the permit for 3 years. So the government would offer a refund in case the permit was cancelled. So here it's a bit different as the tax is recorded per year accrued. So at the very start of the permit, company A pays 4, and the permit value would be 3 because the permit value would be 9 because this is 3 years worth of profits of 3. So that's 7 minus 4 and for 3 years. So at the end of year 1, there would be an account receivable from the government. And now that the permit value has decreased by 3, it's now 6. You would just add the accounts receivable value, which would give you a net worth of assets of 14. And similarly, for the end of year 2, it would decrease. The permit value would decrease by 3, but now the accounts receivable has decreased to 4, and your net worth would be 7. So that's basically how it would look like if the government offers a refund. But for example, another case, I didn't put it here, but another case is when um, it's the combination of case two and case three. If company A decides to sell this to company B, basically it's the same. It would be worth 13, but in this case, the accounts receivable of 8 would be transferred to company B. So yeah, that's basically how it goes. And so other permits, other types of permits undertake specific activities. So the second is issued by the government to control emissions, which does not involve the use of a natural asset. So an example here is atmosphere. If the discharge medium is an asset, so for example, a water resource, this would be treated and evaluated the same way as a permit to use natural resources, as explained earlier. If it's concerning remedial action and not subsequent treatment, this would be treated as a payment for a service. But essentially, the same criteria as well as the first kind of permit to undertake specific activities. And then the third type is a permit issued by other units to limit the participation in a given activity. So this is very uncommon compared to the first one and the second one because they're usually issued by the government. But one example given by SNA is when a hotel with a policy of only allowing one taxi firm to pick up guests is treated as payment of services. So the last type of actually this isn't technically counted as a lease or license, so it's just another type of contract, which are contracts for future production. So this can be applied to both services and goods. So for services, the most common type is that of selling rights to a certain player on a team. So this is actually the example, or the question posed by I think it was Uzbekistan before. So yeah, this would count as a contract for future production. So this can also apply to many other scenarios like publishing rights or other types of performances. For the future goods, um, it, it you have to make sure or it has to be certain that um, there's no possibility for the supplier uh, to back out or it should be stipulated very clearly. So it has to be in the same format as that of entitlement to future services. So um, it has to specify that the good in question is transferable and clearly defines and ensures its supply. So that's it for contracts. For goodwill and marketing assets, um, goodwill is actually the umbrella term for to include marketing assets. So in the 1993 SNA, goodwill didn't actually there was no mention of marketing assets or this wasn't expressly shown under goodwill. So what is goodwill? Goodwill reflects the value of corporate structures, culture, assembled workforce, customer base, etc. And it enhances the value of other assets but is not separately valuable or separately sold. So essentially when potential purchasers of an enterprise are are looking at the assets and liabilities of the company that they're um, about to purchase, there's often a premium above the net value of these assets and liabilities. So this is what is termed goodwill. Um, and so it only happens when there is a purchase. Marketing assets, on the other hand, although it's part of goodwill, so this includes brand names, mastheads, trademarks, logos, and domain names, which can also be interpreted as the overall impression of a company gained regarding the company. So these actually can be sold individually and separately from the whole corporation. However, this only occurs when the company is being purchased to another company or to another institutional unit. So the valuation for this is simply the value paid for an enterprise as a going concern minus the sum of its assets less the sum of its liabilities, each item of which has been separately identified. So every year, this would also be subjected to impairment write-downs by the company accountant. So the reason why we have an impairment test is because although the asset in question is intangible, so it doesn't go through depreciation, um, there it is possible that the carrying amount would exceed its recoverable amount at a certain point in time. So what does this mean? This means that after a certain point of time, um, the fair value of the goodwill and marketing assets may decrease, and this would actually show as an economic disappearance in the books. So this yeah, so it would show in the other changes in the volume of on the volume of assets accounts. So in practice, only the net of appearances less disappearances are likely to be recorded. So this could actually be positive or negative. For the time of recording, they are recorded only again when a unit is purchased in its entirety or an identifiable marketing asset is sold to another unit. And for the manner of recording, these appear first as an appearance in the other changes in the volume of assets account, and then they are subsequently exchanged as a transaction with the purchaser in the capital account. And then afterwards, they are entered into the books of the purchaser in the other changes in the volume of assets account. So the SNA doesn't explicitly say it, but it's been tagged by a lot of papers that what the SNA considers to be liabilities actually include or yeah actually already include shares and other equity, whereas in business accounting, normally liabilities would exclude the shares and other equity issued by the enterprise. So when you're looking at company accounts and you're looking for the goodwill marketing assets, it's important to still include asset equity as part of liabilities. So in effect, this would appear as assets minus liabilities minus equity. So here's just an example. So this is a real life example of how goodwill and marketing assets were, or actually just goodwill was estimated. So this is from a merger of T-Mobile and Sprint, so telecommunications companies in the US in 2018. So I just got this from the US Securities and Exchange Commission. So as you can see, they have identified here the purchase prices for different assets and liabilities, amounting to the total assets were amounted to 78 billion, and total liabilities to 45 billion or 45.5 billion. And they also deducted the stockholders' equity here, which when and the estimated merger consideration or the purchase price of the entire enterprise was listed as 35 billion. So um, when totaled, so when 35 sorry, 78 minus 45 minus 63, that the sum of that deducted from 35.8 billion came out to 3 billion. So that 3 billion is then taken as your goodwill and marketing assets. In this scenario, there's no explicit marketing assets shown, but uh, this may have been this may have been excluded for this scenario because this was already taken as a summary in the total goodwill. So yeah, that basically ends my presentation. Does anyone have any questions on either of these topics? If nobody has any questions, I guess we can go back to Danny.
Okay, thank you, Clara.
Thanks, Clara. Sorry, I think my disconnection was lost a while ago. I actually completed my presentation from my side.
Oh, really?
Yeah. Anyway, I'll just continue. I'm not sure where I stopped, but probably I'll just move on to probability sampling. So I'm currently showing my slide now. Okay, so okay, so let me just move on to the two types of sampling methods. probability sampling and non-probability sampling. Probability sampling allows precision about the relationship between the sample population. Listed here are four types of probability sampling, but we will not explain everything in detail anymore. We will just focus on the sampling method usually used in cost structure survey. But just to enumerate, probability sampling includes a simple random sample where the sample is done through a lottery. Second is systematic random sample where every nth number is selected as part of the sample. Third is the stratified random sample where the population is first divided into groups and for each strata, the samples are drawn randomly. And finally, cluster or multi-stage sampling is where the selection passes through various stages and where large-scale surveys are spread over large areas. Cost structure surveys usually use stratified random sampling, which we will discuss in more detail later. But just to pass through, the second type of sampling method is the non-probability sampling. This is when elements of the population have no chance of selection or when the probability of selection cannot be accurately determined. So it is non-random and is a subjective method of sampling involving personal judgment or discretion of the sampler. Listed here are some examples of non-probability sampling, although these are not really used in cost structure surveys. Okay, let us discuss in more detail stratified random sampling. In this kind of sample, the target population is first separated into mutually exclusive, non-overlapping, and homogeneous segments or strata, in this case groups A, B, C, and D. This is followed by a simple random sample to be selected for each segment or stratum. The samples selected from the various strata are then combined into a single sample. There are subtypes of stratified random sampling, and it could either be proportionate or disproportionate allocation. So let us briefly discuss proportionate allocation. This is when the size of the sample drawn from each stratum is proportional to the relative size of the stratum in the target population. The same sampling fraction is then applied to each stratum, giving every element in the population an equal chance to be selected. So as you can see in the table, the proportion of the region to the population is equal to the proportionate stratified sample. Okay, disproportionate stratified sampling, on the other hand, is when the number of element samples from each stratum is not proportional to the representation in the total population, meaning different sampling fractions are used. This would then mean that population composition must be used as weights to compensate for the disproportionality in the sample. Under disproportionate allocation or within strata analysis, between strata, and optimum allocation. In within strata analysis, we oversample the small or rare strata, which will create disproportional distribution of the stratum in the sample when compared to the population. So as you can see here, region 2 only accounts for 1% of the population, but it accounts for 11% of the disproportionate stratified sample. Okay, the between strata analysis is when there is sufficient number of elements to be selected for each category. So to maximize sample size for each stratum, equal allocation may be appropriate. In this case, all regions have sample of 25%, which is different from the proportion of the region in the population. Okay, and the third subtype, which is usually used in cost structure survey, is the optimum allocation, which sets sample size of the different strata taking into account two aspects. First is precision, where the number of elements selected from each stratum is directly related to the standard deviation of the variables of interest in the stratum. So this would mean a greater variability would have higher sample size. The second aspect for consideration is the cost, where the higher the data collection costs, the lower the targeted sample size. And since implementers of surveys are concerned about cost, the identification of sample size is usually based on cost with the maximum possible precision. Okay, moving on. We are going to look at the steps in selecting a stratified sample. The first step is to define the target population. So in the succeeding discussion, we will include Turkmenistan as an example. So the cost structure surveys population are active businesses or enterprises in the business register. If there is no business register, other lists of businesses can be used, like for example, government administrative data or tax data. In Turkmenistan, they have a state classifier of types of enterprises, which is intended for coding of economic entities by the average number of employed workers per type of economic activity. So this information is usually used in the business register. The second step is to choose the relevant stratification. Usually, this survey is stratified according to employment size and industry class. Shown here are the employment blocks in three surveys: the Annual Purchases Survey of the UK, the business statistics in the EU countries, and the IO survey for Philippine businesses. For the Philippines, they have two kinds of stratification. The employment blocks listed here are for all industries except wholesale and retail trade, where they have different employment blocks. In the case of Turkmenistan, they also categorize employment size depending on sector, a separate employment classification for utilities and a different one for other industries. So in stratification, they have two options: either adopt a single grouping of enterprises, or like in the case of the Philippines, follow your definition of enterprise groupings, which is sector specific. Okay, another stratification is industry class. There are a number of international industry classifications like the NACE, which is used in the survey in Germany, as well as the Structural Business Statistics Survey in the EU. We also have the Standard Industrial Classification, which is the industry classification used in the UK, as well as other classifications like the ISIC, the North American Industry Classification System, and in other countries they adopt their own industry classification. So for Turkmenistan, they have a state classifier of economic activities, which was developed taking into account the main principles in the NACE revised version 2 at the two-digit level. So if this is the classification they used in the SUT, it should also be used in stratification. Okay, the third is pretty straightforward. We just list the population according to the chosen stratification, where we assign unique consecutive numbers to each of the entity in each stratum, resulting in a number of lists equivalent to the number of strata. Okay, the next step is choosing the sample size. We all know that the larger the sample size, the better is the estimation. But a large sample size entails more time and budget. Also, the pattern of accuracy growth is not linear, as we can see in the orange line. The accuracy of a sample equal to half of the population size is not 50%, but already near 100%. So when a probability sample reaches a certain size, the precision of the estimator cannot be significantly increased by increasing the sample size, while the cost and time increase significantly. This means that a good accuracy level can be achieved at a relatively small sample size, provided the samples are representative. Okay, the selection of sample size can be subjective depending on the survey designer, the budget, or based on statistical computation. In some cases, the overall sample size depends on the decision of the sample size for each strata first, or for each stratum first, while another option is to compute the total sample size first before allocating among different strata. Okay, and finally, the last step is to select the stratification type and use simple random or systematic random sampling to select a sample, although simple random sampling is most commonly used. This selection occurs independently for each stratum. Okay, let us move on to country practices in sample design that we can consider adopting in implementing the cost structure survey. In most cases, businesses under the highest employment band are automatically included in the sample each year. Since enterprises in this strata are usually few, and yet they are the dominant respondents to estimate total values. This will then reduce significantly uncertainty on the estimated total values. Okay, in some cases, a sample for a stratum will be selected for 2 consecutive years and will not be reselected for at least 2 years after the selection. This would mean that there is a year-to-year overlap for half of the sample. Having the same businesses in consecutive years will help maintain the quality of editing and validation, imputation, and outlier detection. Okay, another country practice is how to treat really small businesses. This usually refers to those establishments who are employing less than 10 people. One option, like in the case of the UK survey, is a motherly rule, where these small businesses will only be selected for 1 year and will not be reselected for at least 3 years following the selection. This way, we can reduce the burden on small businesses, which may not have the resources for completing the survey questionnaires. Another option is to not include the smallest enterprises at all because their impact on estimates is very small. These businesses also lack the requested information. So this is the case in the survey of intermediate consumption in Sweden. Okay, moving on to the questionnaire design, we aim to answer the what, how, and when of the scope, particularly what data to be collected and the variables to be covered, how the questionnaires are to be answered, and when should the surveys be conducted. So the when also answers the frequency of the survey as well as the timing of the data collection. The timing should be in line with the timeline of the release of the statistics we will use the data on. So in this case, the timing of the survey should fit the timing of the SUT compilation and release. Okay, in designing the survey, we should ensure that we use the concepts, definitions, classification criteria, and questionnaire design, which are consistent with the SUT and input-output table. Such include survey indicators and standardized definitions. For example, our survey should follow the concepts of intermediate consumption as per the SNA and maybe the Eurostat and make clear transactions that should be included and that should be excluded. Okay, the questionnaire is dependent on the budget and needs as reiterated in the earlier parts of the presentation. So in case of limited budget, one questionnaire regardless of type of economic activity can be used. This would be easier to design as we only need to construct one questionnaire, but it would be more difficult for the enterprises to answer as this questionnaire tends to be longer and more general. This is the case in the survey of Georgia, wherein their questionnaires allow them to classify operating costs according to 67 products of the SUT, as well as the survey in Sri Lanka, which includes questions on input and output variables within their 20 questions. Okay, if the budget will allow, it is preferred to develop different questionnaires per sector or industry. This way, we will reduce the burden on the establishment since the questions are tailored to their industry and would then mean that the items are most probably relevant to them. Such is the case in UK's annual purchases survey, where they have 109 questionnaires for the 109 industries. Also in the Philippines, where they have 6 questionnaires depending on economic activity, as well as Sweden, where they have 7 questionnaires. Okay, in some countries, their survey is only specific to certain sectors. This is more cost efficient since it is only intended for the sectors which they need data on. This is the case when the country already has other sources of information for the other sectors or they need more information on certain sectors. In Germany, they have a survey specific to the manufacturing, mining, and quarrying sectors, while in Sweden, they have a survey for the services sector. Okay, and finally, the questionnaire also depends on the information needed for the SUT. In some cases, the questionnaire is intended for the compilation of the input-output table and or the national accounts, not just the estimation of intermediate consumption. So basically, intermediate consumption is just one out of the many information that they aim to draw from the questionnaires. So such is the case in the survey in the Philippines, Sri Lanka, Serbia, and the structural business statistics of the EU. In some cases, the survey is specific to intermediate consumption, like what Turkmenistan is intending to do, as well as the surveys of UK, Georgia, Germany, and Sweden. Okay, so what should be included in the questionnaire? this is subjective, but usually the first part is the introductory letter, which usually contains the purpose and the goal of the survey. If it is mandatory or voluntary, but in most cases, businesses are mandated by law to respond to this survey, so it may be good to also include that in the introductory letter. We should also include how confidentiality is ensured, which person is most suitable to answer the questionnaire, how the information gathered are intended to be used, as well as the summary of information needed and the average completion time. Okay, it is usually followed by the general instructions, including how the forms will be filled up. This is particularly important if the forms will be scanned and computer processed. We should also include definition of terms as well as guidance to help complete the questionnaire, as well as some clarifications if you deem necessary. So for the definition of terms, just to quickly explain, it is needed to define further the terms used in the survey, as the definitions in the SUT framework may be different from their accounting terms. So for the costs and expenses, we should also include information on the valuation. For intermediate consumption, the valuation should be specified at a purchaser's price. Also, we should specify costs that are included and excluded in the definition of intermediate consumption. So this table is drawn directly from the UK survey. It provides instructions, or it provides information on what costs are included and excluded, and would serve as a guide to the respondent. So the presentation is clear and it is easier to understand for the respondents. So it might also be important to include this kind of table in the questionnaires we are planning to draft. Okay, the third part is the survey proper. Okay, so the first information that is usually included in the survey proper is the general information about the establishment, which is also called the control information. This serves as tracking system for contacts with respondents. So the information that are usually included are business names and registered names, um, registry or business numbers, address, authorized person to sign the form, as well as contact information. It is also important to include the economic activity of the business, both main economic activity and secondary economic activity. It might also be good to include the financial or fiscal year of the enterprise, as this differ from business to business. Okay, the next is the total purchases, which is included in some surveys just to counter check that the total of uh, the values in number three is equal to the total purchases in the records. So the third item, which is the most important one, is the detailed purchases used up or transformed. So the costs are listed by products, and the sum of which, as mentioned earlier, should be equal to the total purchases used up or transformed by the businesses, which they specified in number two. Okay, apart from this, you can also include other information that may be of interest. In most cases, they also include inventories, as well as amounts purchased from suppliers in the country and outside the country. This information are usually included as additional columns. Okay, let us discuss further the third part, which is the detailed purchases. So in terms of the detailed purchases per product, we should produce the questions using the statistical classification of products used by the country and in their SUT. There are a number of international codes for products. The statistical classification of products by activity, or the CPA, is used in the UK survey and the EU surveys, as well as the survey in Georgia. Other than the CPA, we also have the harmonized system, the central product classification, as well as the combined nomenclature. Some countries also adopt their own product classification, like in the case of Turkmenistan. As of 2012, they use the state classifier of products, which is based on the CPA 2008. How do we go about the designing of the questionnaire? There are two options depending on the intended use of the data collected. We can have one general questionnaire regardless of sector, which, as mentioned earlier, will most likely be longer, or there might be a need to list all products. While it is easier for the survey designer and less expensive and less time consuming to draft, it may be harder for the respondent to accomplish, since the questionnaire includes all products, even those which are not significant to their nature of business. A sector-specific questionnaire is also possible and is actually preferred, where we include only the set of core products that are crucial to all industries and those products that are subsets relating to the specific industry. So, to avoid restricting businesses to an assumed list of products, the designer usually includes a blank section where they can list their other expenses which are not included in the questionnaire. An annex containing a list of remaining products not specified in the main body of the questionnaire is also useful, so as to serve as a guide to the respondent. Why is it beneficial to use sector-specific questionnaires? This is because consumption structure is very different from sector to sector. In some sectors, there exists no raw materials, while in other sectors, raw materials are fairly large. So if a budget allows, tailor-made questionnaires need to be developed. However, if we opt to make tailor-made questionnaires, there is a need to attain knowledge about every sector and construct a good product list, which is the most difficult part. These information can be drawn from a number of sources, which include income and cost statements of enterprises, the PRODCOM, which provides statistics on the production of manufactured goods carried out by enterprises, which is available only in the EU countries. Other sources may include trade data, annual reports, as well as past surveys. Okay, there are a number of options as well in listing goods and services. First, and perhaps the easiest one, is a form where there is no list of pre-printed goods and services. This is the case in Sweden's survey, uh, particularly on wholesale and retail trade. This means that you only provide them with open rows with a request for filling in the goods themselves. This is justified only when there is a lot of diversified business activities and listing products is not reasonable, as it would mean a tailor-made questionnaire for almost every enterprises. However, this kind of questionnaire should actually be avoided. The next option, which is the more common one, is to list products that are common to all sectors and list sector-specific products. This methodology is being used by the UK and Philippine survey. It is also important to leave a blank section for the respondents to add additional products in case the products they use are not in the original product list. You also have options on how to state the questions. It could either be in table form as in the right, no, table form as in the left, where we list all products in the rows and the needed values in the columns. In this case, we have value of purchases from domestic market, value of purchases from abroad, and inventories. We can also opt to use the question form, which is used by the UK survey, as can be seen in the right. Okay, so before we end the presentation, let us just briefly touch some of the common issues that are encountered. First is the timeliness of the data available. On the one hand, the process of conducting a survey takes time, from sample selection and creating the questionnaire design up to the implementation. Also, on the other hand, the SUT also has its own timeline, so the timeline of the survey as well as the SUT should be harmonized. Another issue is that businesses find it difficult to provide the level of detail due to the high level of product detail and differences in accounting systems. This is particularly true in small businesses, hence the reason why some really small businesses are excluded in surveys or are only chosen once in a number of years. But in other cases, not only do the products need to be specified properly, crafting a detailed and well drafted guide notes and instructions are also important. Okay, another issue is the substantial data changes. Say, for example, there is a huge increase in expenses in a company over a year. So this would call for further validation checks on why this is so. There is a need to set a threshold for an increase to be considered large. So in the UK survey, they set the threshold at a 20% increase or decrease from one year to the next. Okay, the next is the issue of non-responses. So there are two types of non-responses. First is partial non-response, also called item non-response. This happens when business returns a value for its section total, but is unable to break the total down to the product level. The second type is a full or unit non-response, which happens when business does not respond to the questionnaires or to the question at all. In these cases, we estimate the value by imputation instead of deletion. In particular, we use the previous year's data to impute for the current value. Okay, lastly, surveys are considered a burden to the business as it entails the usage of time and resources. One of the ways to reduce the burden to businesses is to employ rotating sample. That is, the business is not selected following the year of selection. Like for example, in the UK, where they were selected for 2 years and are not selected the next 2 years after the selection. Another way to reduce the burden to small businesses is to exclude them or reduce their participation, as we have discussed earlier. Okay, another way is to shorten the questionnaire. One way is to use sector-specific questionnaires and make these questionnaires as concise as possible, meaning the questionnaire should be well constructed, backed by an intensive study of the industries. Also, like in the Georgia case, we can employ a shorter annual survey and a more detailed survey every 5 years. Finally, based on the discussion during the workshop, Joseph suggested a multi-level survey that is to conduct short annual surveys only collecting the most significant information and just select a few firms for a more exhaustive questionnaire to get more detailed information. So these firms can serve as case studies. This way we get better quality information and we reduce the burden to most businesses. So I think that's it for my presentation. If you have any questions or any suggestions, maybe we can open the floor already.